Welcome to today's Explainer. So imagine you stumble upon an investment that's pulling in nearly 66% returns in just a single year. Incredible, right? But then, right as you're reaching for your wallet, you realize the fund house has just locked the doors to new money. Today, we're unpacking a massive, sudden shift in international investing that literally has everyone talking. If you've been looking to diversify your portfolio globally, or even if you just loosely follow market trends, you know that overseas funds have been absolute powerhouses lately. But just as momentum was reaching a fever pitch, one of the major players had to suddenly hit the brakes. We're going to break down this recent announcement from Kotak Mutual Fund regarding their international funds, looking closely at the data, the exact timelines, and most importantly, what this means for you.
Okay, let's dive into this. Look at this number, 65.96%. I really want you to just pause and think about that for a second. In the mutual fund world, seeing a one-year return of basically 66% is nothing short of staggering. That specific number right there is the one-year return delivered by the Kotak Global Emerging Market Fund. Naturally, when a fund explodes with that kind of growth, the instinct for any focused learner or savvy investor is to jump in, right? You want to pour more money into it to capture that upside.
But, well, as is usually the case in the wild world of finance, whenever you see numbers soar that high, you really got to look at the fine print. So if you're staring at that 65% return right now and thinking, hey, I want to drop a huge lump sum in today, there is a pretty major catch. Despite these absolutely incredible returns, Kotak Mutual Fund has suddenly hit the brakes on fresh subscriptions. It's a super fascinating scenario. The performance is stellar, the demand is totally there, but the doors, they've been partially closed to new money.
So what exactly happened? We're looking at a temporary suspension of fresh subscriptions across 4 specific Kotak international funds. And this officially kicked in on April 30, 2026. Now you might be wondering, why on earth would a fund house stop taking your money when their products are absolutely crushing it? Well, it's not because they don't want your capital. Our source material points out that this move is actually reflecting ongoing industry-wide limits on overseas investments. Basically, Kotak had to make a really tough, calculated call to restrict new inflows just to stay within these broader structural boundaries.
This brings us to our next section, the restricted 4. And as we transition into breaking down these specific funds, let me share a really fascinating detail with you. They are actually all managed by the exact same person, fund manager Arjun Khanna.
Now, what's really interesting about this slide is the sheer scale when we look at the data from March 2026. You've got the heavyweight emerging market fund pulling in that massive 65.96% return on an AUM of 935 crore rupees. Then you go all the way to the newly launched Quality Overseas Fund, which has already delivered over 5% since its inception in March 26 on 58.02 crore. And right there in the middle, you have solid performers covering totally distinct themes. From global innovation at 604 crore with a 43.51% return to the international REIT at 98 crore doing over 20%. They're all performing beautifully under the same manager, but all hitting this new ceiling.
So what does restricted actually mean for us? Now, don't panic, because panic is never a good investment strategy. Importantly, it's not a total freeze. Yes, fresh or additional lump sum investments, switch-in transactions, and new SIP or STP registrations over the limits are suspended. But there is a lifeline. You can still invest up to a strict cap of 1 lakh rupees per PAN per month. And if you already had an SIP running before the cutoff, relax. Those installments are completely safe and will continue to be processed normally. It's actually a pretty clever way to manage massive inflows without completely shutting out retail investors.
Now, this whole situation really highlights the tight operational mechanics and, frankly, the drama behind these industry maneuvers. Timing in the financial markets is literally everything. Unit holders were told that if you wanted to get a transaction through without these new restrictions, your purchase or switch had to be timestamped on or before exactly 3 p.m. on April 29, 2026. If your transaction squeaked in before that buzzer, boom, accepted and processed at the applicable NAV. But then, just hours later, the calendar flipped to April 30, 2026, and that new era of the 1 lakh limit officially began. It's a really stark reminder of how fast regulatory caps can change your access to the market.
But wait, as we dig into the source material, we find a truly fascinating exception that we absolutely have to talk about. Kotak manages one other international fund outside of those restricted 4. It's the Kotak U.S.-specific Equity Passive Fund of Funds. And here's the kicker, folks. Remember Arjun Khanna? He manages this one too.
And since it started back in February 2021, it has delivered an absolutely massive 56.20% return. Yet notably, this specific fund was completely excluded from the temporary suspension list. How crazy is that? It just goes to show how targeted these overseas investment limits actually are. It isn't just about the manager or the sky-high returns, it's all about the very specific structures and limits tied to individual funds.
Which brings us to the ultimate takeaway for you. We've seen the staggering returns, we've broken down the mechanics of that 1 lakh rupee cap, and we looked at that fascinating exception. But the big picture here isn't just about Kotak or these specific 4 funds, right? It's about a changing landscape. So here's my question for you. If high-performing international funds are subject to these sudden, industry-wide structural caps on overseas equity, how does that actually change your approach to building wealth? If the door to global diversification can just be squeezed tight out of nowhere, how will these ongoing limits force you to rethink your domestic portfolio strategy moving forward? It's an absolutely crucial question to chew on as you plan your next financial move. Thanks so much for joining me for this explainer. Keep asking those right questions and keep learning.